our central bank is running out of money. Okay, that was a little bit of a clickbait tease. They're not exactly running out of money, they're just operating at a loss. Not that that's any better. Fed data shows the central bank reporting earnings remittance due to the US Treasury of negative $2.9 billion as of October 5th. The Fed by design makes billions in extra interest income from expanding its balance sheet. Unlike other investors, it cannot go bankrupt. It can just print money out of thin air. Any operational losses stemming from its vast portfolio of bonds will simply mean it remits less money to the US Treasury. It is, however, an important indicator of how the bad economic environment has been, given that the Fed is already under pressure to put inflation under control, and it's not succeeding. The central bank has ramped up its fight against higher prices, paying added interest on bank reserves, and through programs like the Reserve Repurchase Agreement Facility, better known as the RRP, as it attempts to dampen demand. Joseph Wang, a former trader on the central bank's open markets desk, explained that the interest rate the Fed pays bank increases with each rate hike. The last interest rate hike pushed the Fed into an operating loss. With interest rates most likely going up several more times, things are not looking good for the Fed or for us. The good and the bad news for us is that the Fed has a unique privilege of setting its own accounting standards. And the Fed has decided that it will never go broke. No way. Unlike all regulated banks, operating losses will not reduce the Fed's reported capital and surplus. The Fed will maintain a positive reserve surplus accounting offsetting its operational losses, one for one, with an imaginary deferred asset account, no matter how big the loss is. Deferred asset represents costs that have occurred, but because of certain circumstances, the cost will be reported at expenses at a later time. So even though everyone knows the Fed is operating a loss, it will not report it. Very convenient. How will this affect us? Aside from the fact that it shows how bad our financial situation is, if the losses continue, the Fed will be forced to create reserves to pay its bills. If it hasn't large enough losses for a long time, it would have to create such a large amount of interest-bearing liabilities to cover its expenses that it would worsen inflation and likely result into a deeper recession. Now, don't worry, it's not time to panic. If we have to worry about something, let's worry about inflation for the time being. But it's good to know where we are, and it's also really good to be prepared for the future. Remember that investing is a marathon, not a sprint. It's always better to know what you're playing with so you can better have a better strategy of what you're going to do in the future. I'm Colin Plume, CEO of Noble Gold Investments.
If you're interested in investing in precious metals and you want to talk to a no-hassle representative that has experience in physical metal, give us a call. Phone number is 877-646-5347. Our phone lines are always open, and we're happy to answer any of your questions.